Despite the U.S. adding more jobs than expected last month, inflation, interest rates, and the war in Ukraine have many on Wall Street worried about the possibility of a recession. This comes as investors and policymakers await U.S. inflation numbers this week. So for more on this, I want to bring in Paul Nolte. He is the Senior Vice President at Kingsview Wealth Management. Paul, thanks for joining us. So listen, I know that there is hope that perhaps inflation has peaked, but is there any good way to make that prediction? Any way to gauge where inflation is going? It seems like as long as gas prices keep going up, then the price of everything else will as well.
No, that's true. That's one of the key inputs for all production. So food, moving goods around the United States, it is very dependent on energy. So if you want to keep an eye on it, certainly keep an eye on crude prices, diesel prices as well for the truckers, and take a look at commodity prices in general. They are now again breaking out to new all-time highs. When you talk about Wall Street and Main Street, there's going to be two numbers that are going to be important on Friday. For Wall Street, it's going to be core inflation, and core inflation takes a look at everything but food and energy. And Main Street's going to be looking at the headline number, and that headline number is still going to be north of 8% and is likely to persist well into the summertime.
So, a lot about how you feel about the economy is how you feel. Like, the things that you buy, are they more expensive? Obviously, most people are going to understand the price of gas. But I'm curious about whether or not inflation rates are different across the country, because we know that it's not just the price of gas. It's also like supply chain issues, whatever's happening in China, the war in Ukraine. There are many, many factors contributing to the increase in prices for different products.
No, there are. And I mean, you can take a look at energy prices as a perfect example, and you can go to a variety of websites and see what gas prices are in Chicago, New York, LA, or in, small town in Missouri or up in Minnesota. And you will notice big differences in pricing of gasoline across the United States. Some of it is due to location to refineries. Some of it is due to taxes in some of the locales. And some of it is due to the type of energy that they're requiring. So California has certain laws about the mix of energy or gas versus, say, in Missouri. So you can see those prices. You see it in food prices as well across the United States. So it does depend on where you're at. We've had a lot of people moving from a lot of different areas into cheaper states. We've had a lot of people moving out of New York, California, Illinois to other states. Now that many can work at home, that's put some additional pressures on some of the local pricing, not only real estate, but food and services as well.
I just don't know how to feel about the future. And I think a lot of people feel the same way. The labor market is doing better, apparently, according to the numbers, according to the jobs report. But then we have people like Jamie Dimon saying that, you can expect a hurricane, and Elon Musk saying he's got a super bad feeling. And people kind of floating around the possibility of a recession while others say, no, that's not going to happen. What's your take on the future? Are we sort of committed to a recession down the road, or could things change?
It's going to depend a lot on the Fed, and I think we are going down that path of a recession. The Fed is committed to raising rates 0.5% in June, 0.5% in July, maybe a pause in September, but they are determined to get inflation down. Historically, if you want to get inflation down, you need to get interest rates above the rate of inflation. And if we assume that inflation maybe tails off toward the end of the year at 6%, that would argue that you want to have Fed funds over 6%, and we're at just north of 1% today. The other factor is the Fed cutting their balance sheet and starting to reduce their balance sheet, and that's going to have pressure on interest rates as well. So all of those factors and what Jamie Dimon and Elon Musk are seeing is producer prices, their input prices are rising faster than what they're able to pass along to the consumer. So producer prices are higher than consumer prices. That puts pressure on corporate margins, meaning their earnings growth is slowing down. We're seeing a lot in the revenue side as well. Revenues are certainly better, but some of that is also due to the higher prices being paid.
That's really fascinating. Paul, thank you very much.
Thank you.